Welcome to the Moore Realtors Weekly St. Louis Real Estate Market Update. I'm Dennis Norman, one of the brokers at Moore, and if you'll give me a few minutes of your time, I'll bring you up to date on what's happening in the St. Louis real estate market. Let's jump right in with some real estate news. Here are a few of the headlines from this past week from St. Louis's best local source of real estate news and information, stlouisrealestatenews.com. I had an article from a local mortgage banker giving his weekly mortgage rate update, telling us how ridiculously low interest rates are, which is great, as well as some helpful pointers, the do's and don'ts when financing your home. An article by a local building inspector, touch of humor to it, comparing houses and the human body and how there are a lot of similarities, talking about maintenance and upkeep of houses. It's a good read. Some good news reported by me, the St. Louis foreclosures declined in November after 4 months of increases, so hopefully it's a trend we'll see continue. And yet another good article addressing whether you should rent or buy a home in this market. Now let's jump right in with some market data. The first few slides that I'm going to share with you here are all real-time market data based upon or containing market data for the entire St. Louis MSA, so the entire St. Louis metro area, which would include a few of the counties on the east side over in Illinois. And this is all based upon active market data. So this is the median price of homes listed for sale right now in the metro area, $176,086. The median asking price per foot of homes on the market currently is $96. They've been they've been on the market an average of 197 days. Now we're going to jump down here. There's more data here you can go through, but we're going to jump down to our market action index. This is something introduced in 2009, and it's a 17. And what this does, quick reminder, is this looks at supply and demand and some other factors in the market, and then gives the market assigns it an index. If it was a 30, it would be a perfectly balanced market, not favoring buyers or sellers. As it goes above 30 up to a high of 60, it's a warmer or hot market favoring sellers. As it drops below 30 down to a low of 0, it's a cold market favoring buyers. Ever since this index was introduced in 2009, it's been very much in a cold market, a buyer's market. However, at 17, it is up higher than it's been. And you can see from this chart here, which shows the history of our market action index since it was introduced, spent a lot of time in that 14, 15 range, then dropped down to 12, bounced around here, but you can see we're steadily climbing uphill above 17. So this is good. The higher this goes, the healthier the market is. Here's a chart that breaks it down into price ranges. I also take this market action index and I look at it based upon what I call 4 quartiles of the market. I slice the market into fourths, with the fourth most expensive homes in one group, then the next fourth, and finally the fourth most least expensive homes. This chart since inception has pretty much been just like prices, only reduced. The blue line up here are the lowest 25% priced homes in the market. That market, the lower price market, has consistently been a better market in terms of our index. And then the green line is the 25 to 50, or the lower third of our market. The orange is our upper second level market, and black finally is the top most expensive part of our market. And one thing that's interesting about this chart, the highest priced market, the top 25% of the homes in St. Louis, price-wise, has steadily had a weaker market than the other price ranges. But you can see here in the last couple of months, that gap is closing. Now the lowest price, I'm sorry, I just jumped backward there. The lowest priced homes, the blue ones up here, are still doing better, but you can see that the high-priced homes are doing well. That market has really picked up over the last month or two. I talked to some brokers today dealing in that market, and they said December was very good, as was January. So I'm seeing some life in that market. Here is the median price trend. Again, this is asking prices, and this is for the St. Louis metro area. And this is over the past year. The orange line is a 90-day average of home prices, and the black line is 7-day average. We look at this two ways because the orange line is truly more of a long-term trend, but the black line is more of a leading indicator. It's quicker to show us what direction the trend's going to head. And you can see over the past year what we've done here, down and up. And again, this is asking prices. They're still about $1,000 higher than they were a year ago, but we can see this recent trend. The 7-day average is pointing up, so I would expect to see the actual trend, the orange line, flattening off and starting to move up. So we'll see what happens there. Okay, now I'm going to jump in and to the core market, our core St. Louis market. This is where the bulk of the real estate business takes place on the Missouri side of the metro area. So this slide and the next few slides all include data that is combined of St. Louis City as well as the counties of St. Louis, St. Charles, Jefferson, and Franklin. And here we can see the number of sales and average sales price. These are actually sold homes now for this 5-county area. The blue columns represent the number of sales, and the green line average sales price. And we can see number of sales, what it's done here over the past year. December actually ended pretty well, outpacing or outperforming November, but basically sales were reasonably flat in October, November, December. January has dropped. Now, being only the 3rd day of February, not all January sales have been reported yet. Agents have a few days to update the MLS information, so this data lags behind. By next week, we'll get a better indication of how January did, but it's going to be higher than where it's at. Right now it's at about 1,500 homes. Whether or not it'll jump up to that 2,000 or better than 2,000 like December, I don't know. We can see average prices pretty much flat, but trending downward here. So again, a while ago we saw for the metro area, listing prices are trending upward a little bit. This is showing average sales prices trending downward a little bit, somewhere around that $130,000 mark right now. Now this next slide shows the median home sales prices, what homes actually sold for, and it's a median rather than average, so it's a little more accurate indicator of the market, as well as the median number of days to sell. The yellow line here is median prices. We can say it went from about $110,000 a year ago to about the same point in December. Now, January, we see a significant drop, but again, the January data is still preliminary, so I think it's going to be a decline in January, but we'll probably have to wait till next week to really see what it's doing, and we can just ignore the February data here. As far as the days on market, it's been from a high of almost 100 days back a year ago to a low of about 70, and then it's been pretty flat lately, around 80 days on the market, although it trended up a little bit this month. Just to give you a little broader look, I added a new slide this week. We're going to take a little longer look at price. This is median sales prices for the past 2 years. So same chart as before, only I went back 2 years. And you can see that this yellow line represents the sales prices. And you can see that it's fairly well flat. I mean, we've got some seasonal peaks and valleys here. But basically, from 2 years ago to today, we're in about the same range, maybe just a little bit behind. Now, nationally, I saw a presentation by Lawrence Ewan this morning, the chief economist for National Association of Realtors, and he referred to a Case-Shiller chart that showed that nationally home prices have been flat for about the past 2 years. So even though there's a public perception that they've been falling, the U.S. home prices have pretty well been flat. Here in St. Louis, we can see they're bouncing around a little bit more, but overall, that's pretty much a flat trend. The red line's the number of sales, and we can see it's bounced around seasonally too. However, very low down here in that maybe 1,300 home range and 1,600 home range in early part of the chart, early 2010. Looks like, right now it's got January down there, but looks like we're probably I don't know if we average this out, we're probably pretty close there too. Now this chart is what I call my realtor scorecard. This one's a chart that looks at the ratio of home sales prices versus their list price. I look at this 2 ways. One, what the home actually sold for versus what it was listed for at the time of sale, so after price reductions along the way and after setting on the market. And then what the home sold for versus what it was originally listed for. And what this does is this shows how accurately the home was priced. and how good a job the listing agent was doing, educating the seller, or for that matter, how educated was the listing agent, how well does the listing agent know the market. In this market, well, any market really, it's critical. You've got to be working with agents that have the resources available to them to be able to track the market and know your market, and then have the ability to interpret that data, apply it to your situation, because real estate is very local, and what I'm talking about here is county-wide for 5 counties, but it's got to be brought down to to your street, to your subdivision, and that's what the agents at More Realtors do. I mean, we provide them the tools like what I'm sharing with you here, only they can drill this down to a subdivision level, a zip code level, a city, whatever's necessary in order to really ascertain what the value of your home is, and particularly when we're in a market where prices are flat or worse yet declining, and it's a cold market and it's a buyer's market, you do yourself nothing but harm by overpricing your house from the start and putting it out there and thinking, well, I can always reduce it later. Horrible plan. Yes, you can reduce it later, and you're going to have to reduce it later more than you would have had to reduce it from the start, just to get a price right, most likely, because in so many markets we still see falling prices. So here, the red line shows the sales price to the original list price ratio, and over the past year, it's been about 90%. It is trending upward here in February, but we're 3 days in, so we can't believe that. But basically about 90%, so that's pretty bad. So homes are pretty grossly overpriced by at least 10% on average when they hit the market. The yellow line shows what happens after they sit on the market for whatever that time period is, 3 months, 4 months, 5 months, 6 months, and either the agent wakes up and realizes it's overpriced, or the seller is finally convinced and they get the prices lower, then they're eventually selling for 96% of their sales price. And finally here, a long-term look at the market. This shows the median list price and sales price trend for the past 10 years for this 5-county area. The blue line represents median list prices, the green line median sales prices, and you can see the peak during the boom, 06, and both list prices and sales prices have been declining since. Now we can see this gap between the median list price and the median sales price growing, and that could mean one of two things. One, it could be a combination of it. That could mean that there's a whole lot of overpriced homes out there, so homes are being priced much higher than they're selling for, which the previous slide kind of indicated that. Or it could also be that there is a segment of the market that's not doing as well, that higher priced homes may not be selling as well as the lower priced homes. Oops, sorry, jumped ahead again. So the ones that are actually making up the sales prices are lower priced. Now, like we saw, the lower priced homes market is a little stronger, but the higher priced home market has been doing well lately. So, but what we can see here is basically, if we look at prices, it's artificially low here for 2012 because again, January data is not complete yet, but it's sort of a disturbing trend because it's really got us going down here below the level of 10 years ago, and for quite a while we were right around that 2002 mark. So I'll watch this closer and dig in a little more, and maybe next week have a little more thorough analysis of that. And that's it for now. This is like I say every week, this is just a quick overview of the market, kind of the macro market, St. Louis market. But at More Realtors, us and our professionals can help you, whether you be a buyer or a seller or an investor. We can help you really understand the market. We've got charts here like what I've shown here. This is just a small fraction of what we've got available. We've got market data, charts, and information that you won't find with any other realtor in St. Louis. We've got brokers, including that lead our company, including myself, my partner John Williams, and our partner Nick Seapack. That combined between us, even though you can tell looking at our pictures, none of us are that old of guys, but between us we've got, I don't know, 75 years experience or something. Plus we've got a bunch of experienced agents that treat this business as the profession, and they approach it professionally, and they're dedicated to learning the market and helping you. Upper in the right hand corner is a newsletter. We have a monthly electronic newsletter, comes out via email. It's packed with market data, real-time market data, some news and information on the local market, some helpful tips, lots of stuff. I suggest you consider checking that out. You can check out all this stuff on our website at mo-re.com. Mo like Missouri, -re like realestate.com. You can also sign up for the newsletter on stlouisrealestatenews.com. In the upper right hand corner, it's stlouisrealestatenews.com. Also on stlouisrealestatenews.com, on the upper left corner, you can sign up for my free 2012 forecast. It'll tell you what's going to happen in the St. Louis real estate market this year, or at least my humble opinion of it. And then down here, this video update that you're looking at now, this is on our Facebook page at facebook.com/more. It's also on our YouTube channel, youtube.com/more-realtors. And you can get it subscribe to our podcast on iTunes. By going to the iTunes store, search St. Louis Real Estate, and click on the arch. Hold on here. There we go. This will make it easy for you to get to all these resources. If you scan the QR code on the left, that'll take you to a website with a bunch of these resources I've talked about for buyers and sellers, and from there it's got web addresses, or you can scan the QR codes. On the right, you can scan that to get that forecast I just talked about. If you don't have a QR code reader, you got to get one. You can download an app for your iPhone or your iPad, and or if you don't want to mess with that, you can go to our site at mo-re.com, and like I say, you can find all these resources. Here's a little legal stuff, and that's it. So until next week, have a great week. God bless you.